Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about Roblox. I did the video on Roblox last week, so I thought I'd go ahead and do an update. So my first video, what I said basically was I was looking for the squeeze. I was looking for Roblox to trade higher, but I didn't want to buy calls unless I got a nice pullback. I started off by selling some put credit spreads. We have since had a high volume breakout that has now pulled back. Today there was some bad news out of China, basically that the Chinese government is going to limit children's online time to 3 hours per week. So Roblox ended up falling today 4%, and that is going to give me a much better buying opportunity for some long stock or long calls. I typically don't want to buy the stock or the calls on one of these high volume up days because that is usually when, number one, the options premium was a little bit higher, so they cost more. Number two, you're right near the target. So I still have my original put credit spread on. And what I'm going to look to do is I'm going to look to add some more long calls, or not, sorry, not more long calls, more stock, and then also some long calls. So if you look at the weekly chart pattern, it's setting up here pretty nicely. I think in the long run, at least, for a long stock, you can at least look for, 110, 112. For the shorter dated options positions, that's where I would more focus on hitting 92 and the 95. But if you look at, what I have going on right here, I've got one put credit spread that I had put on last week that is slightly underwater right now. And then I have 10 shares of stock. So essentially what I'm going to do is I'm going to add some more shares of stock. Also considering coming out here and getting these Delta 60s or Delta 70s now that it's pulled back in the October series. And I could also potentially add another put credit spread now that we're back at a little bit lower of a level. The thing is that I would rather, with a put credit spread, I would rather do it at the $80 price point because that's where you have that high open interest. But I can't do it because I already have an option there. So I think I'll probably be good to go right now on the put credit spread. I'm definitely still holding the spread. I mean, it's, there's still 18 days left in it. And I'll just look to add those calls and add some more long stock. So that's about all I have for you. I hope you have a fantastic rest of your day, and I will see you in the next one.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.